Hi everybody, Patrick Weeks here with my partner Devin, Roch, Skylar Monroe, and we're just here to talk about what's happening in the market. We're getting a lot of questions from clients, so we thought we would take a moment out of the day just to address some of the questions that we're getting. So Skylar, you had a few questions for us.
Yeah, some of the questions that we've been receiving lately is number one, how do you think the recent rate hold announcement affects the sentiment in the market?
Yeah, absolutely. Good question. And we've been hearing a lot about that. So obviously, the news is out there. Banks are likely to lower rates. There was a prediction from the big five banks as to where the rates will be at the end of 2024. And the range between RBC, TD, et cetera, was between 3.25 and 4%. So that's substantially lower than where we're sitting at today. And I think with that, the sentiment in the marketplace is rates are going to be coming down. Now is a good time to buy in anticipation of the lowering of the rates. I think it's a dynamic market. There's so much information available to buyers now that people react before the news has actualized.
And I also think that part of the reason we've been off to a pretty good start this year in the real estate market is anticipating rates coming down. Buyers know from experience that when we get lower rates, the buyer demand picks up and they're often finding themselves in multiple offers and lots of competition. So many of our clients are getting ahead of that, purchasing now with anticipation of rates coming down. And right now we're not seeing a ton of competition. Certain listings are going into multiple offers, but as a whole, we're not seeing that yet. So it's sort of an advantageous time to get into the market.
Yeah, I mean, if we look historically, the beginning of the year when we anticipate the market to improve, buyers who purchase early in the year are often buying at a discount relative to buyers that get into multiples in the spring or summer markets.
Yeah, we've seen that over and over again in our market. So all that said, rates are expected to go down. If you're thinking about buying this year, probably not a bad idea to get on that sooner rather than later.
Yeah, I guess the next topic is probably inventory, right?
Mm-hmm. And what type of properties are you seeing that are selling for a premium right now?
Yeah, so twofold question. Where is the inventory at with respect to properties that are selling for a premium? Well, single family detached homes, there's very few of them for sale. And the ones that are coming up are selling for a premium, especially your standard City of Vancouver lot, which is like a 33 by 122 with the new R11 zoning that allows multiplex up to 4 units. And if you build net zero, you can actually build up to 1.18 FSR. So those are being scooped up by developers, or in a recent sale that we saw yesterday, this 33-foot lot probably sold about $300,000 higher than it would have last year based on the news around the zoning. And we think that that buyer was an end user, likely a little bit concerned about getting into the market before developers start paying a premium for these lots.
Yeah, and just to pack on to what Pat said, we're seeing very low inventory in the detached market, especially in move-in ready homes. So as in addition to the land value sales that we've seen in the last few days with the anticipation of the multiplex, but the move-in ready family homes that we're seeing on the west side, the inventory has remained stubbornly low over the last several years. And we're starting to see some upward pressure on pricing there.
Yeah, the other, and conversely, the sector of the market that we're seeing where there's really good buying opportunity is the luxury condo sector. There have only been a handful of sales above kind of the $4 or $5 million range, and some really premium properties out there that I think, there's good opportunities to buy, whereas in years past, often those will sell and get scooped up, possibly even in multiple offers. Right now, you have the opportunity to negotiate, probably even get a pretty good deal. One of the things that we've seen in that market is that prices haven't really gone up in the last 5-6 years. We saw a pretty big, time where there was bidding wars in around 2017,
2018.
2018.
Yeah.
Yeah, but we just haven't got back to those prices.
No, we haven't. And part of the reason too is it's connected, of course, to the detached market. Is a lot of the luxury condo buyers are downsizers selling detached homes on the west side. And when you go back to 2015, 2016, 2017, those luxury detached homes were selling for 5, 6, 7, 8, $10 million, and seeing many of those transactions weekly. And those people were downsizing, probably helping their children with down payments, and then they were the buyers for the 5, 6, $7 million condos. So it's not surprising because because we have low inventory on the detached homes, so we're not having a lot of higher end detached home sales. Therefore, we don't have a whole bunch of luxury condo buyers as a result. So it's interesting how the two segments of the market are correlated. And as Pat mentioned, if you're in the market for a luxury condo, prices are the same or probably lower than they were back in 2018. So the last 5, 6 years, the values have gone down.
So just to summarize, the buyers of those luxury condos, they need to justify their downsize. In other words, they need to put enough money in their jeans to justify selling the family home to go into a condo and have it make sense. Whereas the spread just hasn't been wide enough.
Yeah.
Yeah, it makes sense.
Another question that we've been getting is, what cycle in the market do you think we're at? Do you see prices increasing or decreasing soon?
Yeah, great question. I think relative to the market, we may be at a bit of a bottom. 2023 was a very challenging year. Mostly, the market was kind of on a downward trend. A lot of negativity around interest rates, just around the overall market. The sort of impending doom potential, or that big correction that I think a lot of people were, anticipating, possibly even expecting. Huge increase in people's monthly payments on their mortgages who are on variable rates. It was a really tough year. Now that things have stabilized, sentiment is improving, but prices haven't really started going up, with the exception of maybe one or two sub areas of the market, like we discussed earlier. So perhaps we're at the bottom of the market and about to climb up the hill.
Yeah, I would agree with that. If you look at the different segments of the market and what's been most affected, obviously it's been affordability with the higher interest rates. But Canadians have, and historically the stats showed us, is that Canadians seem to put paying their mortgage first, and they find ways to do it. And especially in Vancouver, very, very resilient to higher interest rates. So the market certainly slowed down over the last 18, 24 months with the rise of interest rates. But now that there is stability and sentiment has changed, the media has a big impact on the general sentiment in our market. And even now, for the last 18 months, it's all been negative. And now we're starting to see a lot of the articles being published. Okay, rates are stabilizing. It's not if, it's a matter of when rates are coming down. And as we talked about earlier, in anticipation of that, people are starting to buy now. And we still have low inventory. And as demand increases, as rates go down, I feel like we're going to have upward pressure on pricing. So to agree with Pat, I feel like we're coming out of a slight decline in pricing. We've probably flattened out, and I would expect prices to go up this year.
Awesome. Well, thank you for watching, you guys. If you have any further questions about what's going on in the market or any real estate inquiries, give us a call.